Welcome, Seymour Williams, a mortgage broker. We are so excited that you're one of the first people who are here for our video article. So we're so excited, but we think you have some great information to provide for our readers of Henry Watt's Real Estate and Lifestyle magazine. You are a mortgage broker. So first, tell us who you are, your background, and then we'll talk about what is a mortgage broker.
Well, I am the president of Accountable Financial Management Corporation. We've been in the mortgage business since 1988. It's a long time. And we service people who need mortgages throughout the state of New York.
Okay. So exactly what does that mean? You service folks within New York City. Tell us more about the mortgage brokerage business.
Have been around for quite some time, but after the mortgage meltdown in 2008, the industry changed dramatically because of Dodd-Frank, and CFPB was created. They created the nationwide mortgage licensing system, NMLS, and a designation called an MLO.
Which means?
Mortgage loan officer.
Okay.
Actually, mortgage loan originator.
Okay.
And to become a mortgage broker, you have to become a mortgage loan originator first.
And what are the requirements for that?
Take the 20-hour course, and then you have to pass a test. Now, the test is not easy, but if you're prepared, you'll pass it. I teach the course sometimes.
Okay.
And the pass rate is probably around maybe 60%.
60%? So you really have to study for it.
Right.
Okay.
People that don't study don't pass.
Okay. And you mentioned CFPB. Explain what that is, please. And Dodd-Frank rule. How did this impact the mortgage brokerage field? Because you did mention that earlier.
Well, the mortgage meltdown happened in 2008, right after the stock market crash in 2008. And that's because they had become quite lax in terms of the mortgage regulations. Back in those days, they had what was called liar loans. Basically, all you had to do was be able to fog a mirror, you were able to get a loan. And they didn't.
Repeat that again?
All you had to do was be able to fog a mirror, and you could get a loan.
Breathe. All you had to do was be alive. That's funny. That's funny.
Yes. And so as a result, there were a lot of loans that were really not the best quality loans. And when the market tanked and you had the whole mortgage industry collapse, basically, all of those bad loans wound up being, not able to, well, they basically went to foreclosure, those people that had those types of loans.
Mm-hmm.
They were not good loans in the first place. The collateral sometimes was not good. Even back in those days, even the appraisers were able to do things that they shouldn't have done. So as a result of what was going on in the industry, they really tightened up all of the regulations.
And that's the Dodd-Frank.
Frank, yeah.
Okay.
Yeah.
And
Well, the Senators Dodd and Senators Frank, they created the CFPB is Consumer Financial Protection Bureau.
okay, that's what the CFPB. Yes.
Yes.
So how are we protected as consumers?
Well, it's all about protecting the consumer.
How?
Well, they have a lot of disclosure requirements
Oh, I see.
for lending now.
Specifically, what are some of the
Well, there's
disclosures?
basically two things. You have the loan estimate that the borrower has to receive right at the onset of the loan. And then you have the closing disclosure, which is near the end of the loan. And they have to match in terms of the fees that are being charged and all that stuff.
Understood.
And it's in plain English. So it's much more easily understood by a novice that doesn't really know what's going on with finances.
Okay. So the question is, why should we hire a mortgage broker as opposed to just going to the bank?
It's a very good question. Well, in my opinion, of course, that's the best thing you could possibly do. Mortgage brokers are agents of the borrower, which means that they represent the borrower. When you go to the bank, you're working with a bank employee. They represent the bank. It's best to have an agent working for you as a borrower.
So does that mean that I'll get a lower interest rate perhaps working with you?
It's possible.
Mm-hmm.
It's quite possible. It doesn't always guarantee a lower rate, but sometimes it's a matter of whether you get approved or not.
Exactly. Okay. So what are the fees for a mortgage broker? And also compare your fees with the bank fees.
All right, I'll explain that. Basically, mortgage brokers are wholesalers.
And that means?
Well, imagine if you go into a dress shop. You go to buy a dress. Let's say the dress costs $100. Now you know that store owner didn't pay $100 for that dress. You're paying retail, right?
Oh, I see.
So when you go to Citibank or Chase or Bank of America or any one of these other banks, you're paying retail pricing. Mortgage brokers are considered wholesalers. We get a loan at a discounted price. That is the wholesale price. We add our fee as the markup, which brings it back up to retail pricing. So a borrower can use the services of a mortgage broker, and it doesn't cost them any more than if they went directly to the bank on their own.
So what you're saying is the fees are the same then. If you bring you attach your fee, you said you bring your fees up to what?
Retail.
Retail.
I can, or I could keep it below retail. I have a little bit of control over.
So how do you normally perform? Do you?
I usually bring it in below retail.
Okay, that's what I want to hear.
Slightly below retail.
Slightly.
Yeah.
Okay.
It depends.
Okay. So if I'm hearing you correctly, you work for us, and so you would shop the market for us and try to get the best deal for us. So what does a mortgage broker do?
Mortgage brokers help borrowers obtain loans. They don't originate loans. They don't they don't lend their own money. They're like brokers. They're in between the borrower and the bank. A mortgage broker represents usually anywhere from 5 to 15 different banks. And sometimes the banks are in California or Miami or all over the country. So the advantage to the borrower using a mortgage broker is that mortgage broker is able to shop the loan. The most important thing is there are different types of borrowers. Like there's a plain borrower that has a W-2 and 5 years of work experience at the same job. That's one type of borrower. Another type of borrower might be a foreign national that's just here for a short period of time, maybe not even a U.S. citizen. That's another type of borrower. There are loan programs for that type of borrower. There might be someone that works at a store and a self-employed person that has, or a 1099 person. Okay, so they're all different types of borrowers, and sometimes when you go to a bank, and each borrower has a different type of program. So for example, you can't put a round peg in a square hole, right? Mm-hmm. So if you are a round peg borrower, you can't fit into a square peg loan program. Mm-hmm. Okay, sometimes you'll have a borrower that can be qualified, but they go to the wrong lender. That lender only has a square peg
They have one
program.
product.
They only have a square peg program. Mm-hmm. So you go there, you're a round peg borrower. You go to an institution that only has square peg programs, you may not get approved. So you want to make sure let's say if there's different loan programs, they may do programs A through Z. If you go to a bank that only has programs A, B, C, D, and you're a borrower type of G, you're not going to be approved.
Mm-hmm.
So you need to go someplace that has a lot of different programs.
And so most mortgage brokers do have
Yes.
different programs.
Right, they should have the full gamut of programs that are available on the market.
Okay.
So that's one advantage there is using a mortgage broker. In addition, one of the most important things is the mortgage broker does not get paid until the deal closes.
But doesn't that happen with the regular mortgage broker that works for a bank? Do they get? They hire. They get paid every
salary.
week. Yeah, salary. So
So
it
they're
doesn't
less
matter.
interested in whether your loan gets approved or not.
Oh, so you might be more aggressive because
Right.
your fee is on the line.
You have a vested interest in seeing the person get approved.
I do understand that.
So that's the main.
Yeah.
That's
So
a big difference.
what has your success rate been?
Well, we've been around since 1988. That's saying something.
Yes. I understand. That's good.
Yeah, we have. We've had right now about 5 MLOs working with us. That's it. Mortgage loan
5.
originators. As a
Uh-huh.
mortgage loan originator.
You have 5 what?
Mortgage loan originators working with us.
Oh, I see. You have other folks working with you as well.
Yeah.
Okay.
Yeah, it's almost like a mortgage broker is almost like a real estate broker where you have real estate salespeople.
Mhm.
Well, in the mortgage area, you have MLOs.
I
MLOs
see.
have to take the test, and
But they're working under you.
yeah,
Okay.
all MLOs have to work under either a bank, a mortgage bank, or a mortgage broker.
I see. So, how do you shop around for a mortgage broker? How do you know if the person, you can look at their license, of course. You
Mhm.
can, look at their license online. But what else do you need to know?
Well, I'd say it's a very highly regulated industry, and every MLO has gone through background checks, credit checks. They have to have surety bonds. So if the person's an MLO, they have to be quite honest.
But how do I know if you're the right fit for me? I'd say Seymour, I want to find a 4-unit apartment building. And, I have found one, okay? And 3 units are occupied, and I will occupy the remaining unit.
Yeah.
So how do I know that Seymour is the best person to help me get the mortgage? Because I've already identified the property. So how do I know you're the best fit for me?
Well, hopefully they have a rating by one of the rating agencies, like you get the.
You mean you would have it?
Yeah.
Okay,
like
you
the,
have a rating.
Better Business Bureau rating.
Mhm.
Our rating is A+.
Okay.
So that's important, and certainly, hopefully, have a reputation that precedes you, and you could say, well, you could ask, here are other people we've done loans for that are willing to endorse us.
Okay. Is anything else you want to tell our audience about a mortgage broker?
Yeah, mortgage brokers are highly regulated, so they're usually, very competent because it's required. It's all types of continuing ed requirements. They have to be pretty honest because back in 2008 when they had the mortgage meltdown, they eliminated a lot of people who were a little unscrupulous in terms of their business, and they've been eliminated.
Okay. So how can our audience find Seymour Williams?
Well, we do have an email address.
Please provide it.
I think it's afmcmoney.com.
That's a new one, because I have a different one.
Well, you have an email address.
Oh, okay, yes.
ACCFIN1
Yes, that's the one that I have.
at AOL.com.
Yes, and give us your mailing address, please, and your telephone number.
501 Main Street, New York, 10044. Our phone number is 212-644-8255. 8231.
Well, Seymour, it has been a pleasure. This conversation has been very, very informative, and our readers and the viewers may hit you up for questions in business.
Well, thank you for the opportunity, Valerie.
It's a
always
pleasure.
good to see you.
It's a
We've
pleasure.
known each other for longer than I'd be allowed to say.
That's true. That's true. Thank you so much.